chart fashion what's happened. This is just an update. The last data we had was about 3 months old. This is today's data. You can see here prepayments got up to almost 20. They're down near about 6 right now. Almost the lowest prepayment level on record for mortgages, for good reason. Interest rates are extremely high at over 7. Most of the outstanding mortgages out there are paying under 3.5. Why would anyone refinance? But our main focus is on legacy borrowers. These borrowers they're paying over a 5% coupon, first of all. They've been in their home for 17 years. If you've been in your home for 17 years, you likely have kids moving off to college or potentially having grandkids. You might be an empty nester right now. Oh, you also have over 60% equity in your home. So can prepayments go 1 or 2 percentage points lower? Sure. They could go to 3 or 4. But coming up on the end of that mortgage, for someone who's 52 or 53 and has 60% equity in their home, and they're making over a 5% coupon payment, there's other reasons why someone might refinance other than just, oh, I'm going to take advantage of current interest rates. So I alluded to, we're sitting at the lowest LTV ever, the lowest prepayments almost on record. Spreads are at crisis level highs. Agency spreads are back to about COVID level highs. Not as high as they were during the GFC, but we're approaching that. Okay, what's going on? The government's not buying, banks aren't buying, etc. Defaults are back to pre-GFC levels. No one's going to default on a loan that they have 60% equity on, and they're only making a $1,400 a month payment. Okay, so just to put these into percentiles, prepayments have only been lower than they are today 3% of the time over the last 20 years. Spreads are sitting at about their 89th percentile. Okay, spreads are as wide as they've been only 10% of the time over the last 20 years. Borrower equity has never been higher than it is today. There's never been as much equity in the United States in homes as there is today. And defaults are approaching that GFC level, and they should continue to go down as equity's been built up. Borrowers have a lot of incentive to stay in their home and make that $1,400 a month payment, which is cheaper than a 1-bedroom apartment in most places in the United States.